All right, welcome back. My name is Patrick Dunawilla. I'm the editor of the Chart Report. Joining me again this week is Steve Straza of All Star Charts. Steve, last week when you were here, you shared this great chart of the S&P 500 going back to the great financial crisis, and you basically made the point that this steady bleed up that we've seen in 2021 is really nothing new, and it's actually quite typical in post-election years. This week, you have a bunch of bullish developments that you want to hit on. So I want to get right into it. How are you kind of weighing the bullish and bearish evidence right now?
Well, first of all, just to take a step back and talk about the chart you were just discussing, it's hitting a key Fibonacci extension, right? So it's a logical level to see some consolidation or some digestion of these gains, right? So that could come in two very small consecutive down months, and then at which point we resume in the direction of the primary trend, right? So this wasn't some sort of call like, hey, the run's over. This is something to pay attention to. And so
right, and I know you kind of take a weight of the evidence approach, and again, that was just one data point, but it seems like the evidence is kind of switched in the favor of bullish. You have this bullish checklist, and it got over 50% this week. Is that kind of your threshold for stacking the evidence in favor of the bulls?
Right. So like we're a way to the evidence shop at All Star Charts. We're top down disciples. That's how we really do our work. So when we're in markets like this one, which is what I'll call, it's just a very indecisive market, right? And it's been that way since Q1. So one way that we can help ourselves navigate it is saying, all right, what are the most important charts and what kind of environment are we probably in if this chart is above this level? And what type of environment are we probably in if this chart is below this level? So we put together 25 different charts that we felt were critically important, some of the most important charts in the world. And they all speak to risk and risk appetite, right? So for example, just look at this list. We have, S&P consumer staples ratio. We have the NASDAQ. We have the all country world index ex-US. We have emerging markets. We have semiconductors, right? These are some of the most important indexes in the world. We also have risk appetite ratios in there, right? The 10-year yield above 1.4. We know that if more and more of these charts are above our risk levels, we're likely entering an environment that's more conducive to risk assets, and also vice versa. So what happened this weekend, as I'm doing my review, I realized, wow, our risk checklist is at its highest level since we introduced it back in June. And that to me, that means a lot, right? Because you have to start somewhere. Sure, it's only 52%, so it's slightly in favor of risk right now, right?
But again, it's at the highest level that we've seen in quite some time.
And we're moving in the right direction, right? And the way these lists work is a lot of these charts are very correlated. They're all correlated with risk on behavior. So what you'll see is as more and more start to resolve higher, it's like a domino effect, right? So you'll see, okay, EEM is resolving higher, all country world is resolving higher. Okay, 10 years probably above 1.4 in that environment. SPY TLT is one, show that chart. The stocks versus bonds ratio just broke out to all-time highs, back above our risk level. That's one that just flipped last week, the past few days. The all country world ex-US index, we use the Vanguard ETF VEU, that reclaimed its pre-financial crisis highs. There's still work to do. I want to see a breakout and a strong leg higher. I want to see emerging markets follow, which they haven't yet. You could show the double pane chart of emerging markets. But it's not all bullish, right? So I brought along two charts that we need to see kind of get back above our risk levels before we can give the all signals go. And well, the Russell 2000 is one of them, but go to the next chart. That one's back above our risk level. I want to see a more decisive move and validate the breakout. Next chart. These are critically important sectors in the United States. All right. These are our cyclical groups. We could have added energy in here too. Industrials and financials, more so than anything, they're large sectors. Industrials have the highest correlation with the broader market. Historically, it's always been that way. It makes sense. There's everything. It's such a diverse group of stocks. They stopped going up in May. Did financials make a slight incremental high this month or last month? Yes. But right now it's failing and it's back below that level. That's not good. We need to see these charts break out just like we need to see emerging markets break out. Another one that I'm really waiting on, and I wrote in a post yesterday, in my opinion, it's the most important on our list. The US 10-year yield needs to get back above 1.4. If financials are going to make that sustained breakout, you're going to see this chart back above 1.4. That's going to be a bull hook. We're going to, make a swift move higher. It makes sense. Like I'm talking about the SPY TLT ratio, stocks are breaking out relative to bonds. If that really starts to move higher, you would think bonds are moving lower, yields are then moving higher. See how it all kind of comes together?
Yeah, and you're not the only one watching that 1.4 level. It seems like a lot of people are fixated on that.
Yeah,
If you could just hit on that SPY TLT ratio, because we used it for chart of the day yesterday. You pinged me and you're like, this is the chart to watch. So just go into that a little further and how it's going to affect other areas of the market and what that message is telling you.
So we have a lot of, we do a lot of intermarket analysis. We love our ratio charts. Just look at how similar this looks to mid cap or small caps. And we could have overlaid mid caps. We could have overlaid the value line. It looks similar to basically the average stock. It's gone sideways since Q1, early Q2. It's been consolidating. If that breaks higher, I would say there's a higher likelihood than otherwise that the Russell 2000 breaks higher. And if the Russell finally breaks higher, it's all systems go. In that environment, you probably see the 10-year back above 1.4. You see emerging markets back above their pre-financial crisis highs. Things are really starting to come together in that environment. And like I said, it's a domino effect, right? So once you start to see one resolution, you'll typically start to see more resolution. So if SPY TLT can stick this landing and really make a decisive breakout here, I think it's only a matter of time until some of these other charts follow. And then in that case, our bullish checklist or our risk checklist will probably be at 75, 80%. And we'll be telling people, it's time to buy stocks, hands over fist.
Yeah. So plenty of bullish developments as we enter that fourth quarter. The last topic I want to talk about is this kind of global breadth expansion. We've seen a lot more participation from other international equity markets. Do you want to just go into that and kind of what you're seeing from there and how you're interpreting it?
So last week we talked about China, right? And the importance of just, gosh, if China could just stop going down and catch a bid, then look out for these international markets, right? I think we shared the chart of Chinese tech versus the S&P. Well, this is the Shanghai composite relative to the S&P 500. And it just broke to fresh, almost 30-year lows. But it's kind of found its footing at this level many times in the past. So it's another one of those charts, just like Chinese tech, which, by the way, did rebound off that level since last week, where it kind of begs the question, what better place than here, what better time than now for China to kind of reverse its relative downtrend. And
yeah, I thought that was interesting. China was like the only green spot. If you looked at the international market heat map yesterday, China was like the only green component there.
They do what they want. They probably have one of the lowest correlations with the global stock market. But let's talk about the improving breadth, right? Because if we're going to get emerging markets back above those pre-financial crisis highs, if the all country world index ex-US is going to stick this landing, and really break out here and make another leg higher, we need support and participation beneath the surface confirming these moves. And that's exactly what we're seeing. You can look at our 4-week, new high, new low indicator, our 13-week. The reason we do that, 4 weeks is a month, 13 weeks is a quarter, 65 days, 21 days, makes no difference. You see the same thing if you look at 52-week highs. Basically, new lows are non-existent and new highs are at their highest level pretty much of the year.
Yeah. I brought this quote from me, Platitude Pat. The most profitable market moves in the United States occur when the overwhelming majority of the world markets are in agreement. And that's kind of what we're seeing here now, no?
So he's just speaking to confirmation, right? And the importance of confirmation. So it's exactly what we're seeing. We're on step one, maybe, right? So we got the all world ex-US index back above that key level. Now let's see emerging markets do it. Europe's already done it. Look at the Nordic region. I brought a weird chart along. These Nordic countries, I don't know what's going on over there in these economies, but insane. It's more than doubled off of last year's lows. This is Finland, Sweden, Netherlands. These stocks are hot right now.
But Steve, on a relative basis, the S&P 500 is still the place to be, right? The US is still the place to be, no?
You can find countries, whether it be Switzerland, Taiwan. Trying to think of some of the strongest ones right now. We have some weird ones like Lithuania that we look at. You can find some countries that are outperforming the S&P, but you're not going to find a international diversified index that's even coming close to outperforming the S&P.
But I guess your point is the fact that they're all working higher is, again, more confirmation of that bull market in equities as an asset class around the world, not just here in the US.
Confirmation beneath the surface, right? These indexes are made up of stocks from all these individual countries. So if the individual countries are going to break out and are in strong uptrends, then it should put a bid in the ETF.
In US equities.
You know?
The one that has been outperforming. So let me ask you this. Are there any particular areas, you mentioned Taiwan, things like that. Are there any particular international markets that you like? I know there's some strength in Argentina and things like that.
Listen, I mean, I brought along a little list. Go show the momentum report for me quickly. Just
Sure.
Look at that sea of green, right? So this is just a scan that we do internally. We actually share it with our Plus clients every week. This is our international universe, our list of international ETFs, all the countries, all the regions, all the big ones like the S&P Global, all country world, like we talked about, emerging markets, blah, blah, blah. Look at the new highs. Look at all the new all-time highs. So we can go down the list and look at them, but it's Denmark, it's Finland, it's Ireland, it's Israel, Japan, the Netherlands, Taiwan, India, Saudi Arabia. Like I said, these Nordic countries, they're all crushing it right now. So this is the best support beneath the surface and the most participation we've seen from global markets all year long. So that really begs the question, as price is knocking on, their former all-time highs in these international indexes, well, breadth is supporting it. Now we just need to see price get it done. Well, but I would focus on the leaders, as always, focus on the leaders. And what's also interesting, Pat, is they're not coming from just one region. If you think about the stocks that I just named, emerging countries, frontier markets, right? Saudi Arabia.
Yeah, how about frontier markets? They've been great all year.
Show that chart. I mean,
meanwhile, emerging's been sideways and very disappointing because it was the hopeful trade going into 2021.
Which was a faulty thesis to begin with, but that's besides.
Now, this is a monthly chart you have here?
Yes.
But it's basically showing that breakout could be just getting going.
Yeah. Love that chart. Looks great.
Well, Steve, great stuff. Thank you so much for sharing your insights. I'll see you next week.
All right, buddy. Looking forward to it.